Good afternoon, everybody. Let's jump in right away. I'm a few minutes late. I'm an associate member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRECIPIC. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. Position disclosure is right here. Got into a little bit of this Paramount yesterday that I still have kind of flattish in the position P&L wise. Still have a little bit of Google from the 140 area, and I got into this NXT today. Cool. I wanted to get through that. I've been so busy since 4 o'clock hit. Yeah, Pins is up 5% here. Snap's the one that I'm in. Snap's up big after hours. Been so busy trying to manage some positions here. That I actually haven't even looked at the numbers yet for Meta or Amazon. Obviously, I know Meta's up big. So, usually this is the one earnings day, with the one day per quarter that I actually cancel the afternoon meeting. Right, we do a quick one up until 4:30. But this is actually the first time that I'm not holding an Apple position in the earnings report in like 2 years. So we can watch it together. I don't necessarily have any plans to trade it, but no promises. Apologies to anyone who's been following along on YouTube regularly that you didn't have a broadcast yesterday. Josh Leffler did the afternoon meeting, and we don't have him set up for the YouTube connection yet. But based on popular demand, we're going to try to have him do it more often, and we'll have to get him set up on that. Yeah, Mike, if Josh is listening, we've got to get you set up. All right, the YouTube should be live, yeah. I have it up on my other screen here. Someone said hello. I want to look at these numbers. I didn't have an opportunity to look at Amazon or Meta's numbers. Oh, they're both trading up. Amazon's trading up too. Did it downtick initially? Nope. Up and up. All right, Amazon, AWS, like basically in line. AWS net sales, very, very, very small miss. The guidance on Q1 is like kind of right in line, that range it looks like. Also for Q1 net sales. Amazon fourth quarter net sales was a beat. EPS is a big beat. Amazon, $1 versus 78 cents expected. Fourth quarter net sales is also a decent little beat. Yeah, so the Amazon numbers look pretty good overall. Initially, the implied move is to wait, what? 417.90? You must be talking about Meta. See ya. Meta is just gone. Gone. All right, Meta reports fourth quarter EPS $5.33 versus $4.83 expected. Massive. Hold on, I just got to fill in some things here. Let's see what I did. All right. These Qs have not ticked down. All right, anyway, what was I just looking at? Meta? All right, so Meta just destroyed EPS, right? Revenue, $40.1 billion versus $39 billion. Nice. Initiates a 50-cent per share dividend. Sweet. They boost their buyback by $50 billion. Excuse me. Wow. They see Q1 rev, $34.5 billion to $37 billion versus estimates at 30. They just crushed it. Estimates at $33.64 billion. Platforms, fourth quarter EPS. I'm just Meta. Is Meta called Meta Platforms? I didn't even realize that. I thought it was just Meta. I literally am finding out right now for the first time that the name of the company is Meta Platforms. Let's see here. They boost their buyback by $50 billion. It's huge. Huge. Plus the dividend. Goodbye. Why is pins up so much? Because off Meta's up, because those Meta numbers are massive on the revenue numbers. So pins up big, snap up big here after hours for the moment. Okay. So I'm trying to juggle managing. You know, I've got a snap position, I've got a TQQ position. Everything is moving secondarily to these earnings. I'm not even trading the earnings. It's keeping me really busy. All right, so boom. That's all I got to say about that. Boom. Let's pop over to the charts and try to let's attempt to do some sort of an afternoon meeting here. All right. Holy cow, is that accurate? I guess this includes $1.50 or so extra move in the SPYs, including the after hours move. SPYs are up 1.65%. Sorry, one second. I got filled in something again. Couple somethings actually. Q's up 1.9%, including this initial after hours move. I think Q's up an extra 2. Wow. Q's close to like 422. They're at 425 right now. Q's are up like an extra $3 after hours. Whole market's kind of rocking and rolling right now. And the Russell is up 1.3% and is down like 5 cents since it closed. So this is the only accurate reading here. Yeah, Apple is going to be important. This move is massive right now. So we'll see. Apple comes out at 4:30. We'll take a pause on the afternoon meeting at 4:30 to look at Apple, assuming we ever actually get underway with this afternoon meeting. Yes, let's pop over to the charts. Really strong day today, obviously. You know, the SPYs were able to just barely get above yesterday's high. So we fully 100% retraced the down move that came from the Fed meeting yesterday for the SPYs. The Qs did not get above yesterday's high in the intraday action, but they did get back above our 2 p.m. starting point. So the Qs also fully erased the downside move that came from the Fed yesterday, though they technically gave an inside day. They closed above the 2 p.m. high and obviously are continuing here after hours. The IWM, what else is new? Relative weakness was not actually able to do it. It's still up like 1.3% here after hours, but 196 is a key support level that the IWM lost yesterday. We were not able to regain that, and we were not able to regain the starting point of the Fed at 2 p.m. So it's kind of just a continuation, I feel like, of what we've seen a lot with this market, where it's the SPYs and the Qs continuing to outperform and the IWM continuing to lag, and it's despite the big move in the TLT. I mentioned in the morning meeting today, because I read it off of Pat's morning note, I think in the month of January, even though it was an up month, obviously, for the SPYs and the Qs, that I think 7 out of 12 sectors were negative for the month. So not fantastic. I see Dave here is giving me an update on the Russell versus NASDAQ pairs trade, including, since earnings here. Wow, so this is just kind of real time. Obviously getting destroyed. Here it is from Pat. January will go down as a positive month for the market because the S&P 500 was up over 1%. Not bad. But things look quite a bit different underneath the surface. 7 of 11 sectors, 7-11, I should be able to remember that. 7 of 11 sectors saw the average stock decline. The average tech stock was up just 0.4% versus the sector's gain of 3.9%. Yeah, it just shows you that breadth in January was still very poor, and there's not a lot of market participation, and you can see that in the IWM, which we keep looking to see if the IWM can play some catch-up given this move in the TLT, but we just haven't been able to get it. And, you know, the IWM and the whole market got rocked yesterday on the Fed, and the IWM lost 196, which was a key support zone, 195 to 196, that it had been consistently holding as we were waiting to see if it could break out above that 198.50 area, which is a major resistance level. So coming into today's trading session, from a game planning perspective, and I've only got a few minutes here before the Apple report, but from a game planning perspective, what we had discussed was that today is technically a common gap up after a negative Maribozu penalty box style candle. But we are still within the confines of a big picture uptrend. So the rarest thing that you can see is actually what occurred today, which is a negative Maribozu followed by a positive Maribozu that fully negates the downside move. Even if you're going to quickly negate the negative Maribozu candle from yesterday, it's usually still a 2, 3 to 5 day process where, you know, maybe you get an inside nut that breaks it, maybe you get a further breakdown and a pivot low, and then you kind of snap back up with like an RDR type of low there that gives you your pivot for the daily chart. So, you know, the initial thought process, just speaking 100% technically, would be to look to short the gap up. However, I was trying to really provide another perspective on top of that as well. You know, again, technicals are really important, and very simply put, after yesterday's candle, a large gap up is technically something that you want to short. But I kind of felt that there was a chance that we could break higher for a couple of reasons. One, the day after a Fed day is pretty often, but not always, a trend day. It has a much higher probability of being a trend day than your average trading session does. And from my experience, that trend day does not necessarily have to be in the direction of the initial reaction that the market gave after the Fed. So the initial reaction the market's giving after the Fed is to the downside. We particularly got hit when Jerome Powell said that the March cuts were off the table. But I've seen this happen in the other direction also. I remember in 2022, there was a Fed meeting where the market ripped up from 2 to 4 p.m. And then the very next day was one of the heaviest, strongest intraday downtrends I feel like I've ever seen in my career. This was a little bit of the opposite. So there's that. Plus, I kind of felt that, I don't know what the right word is, but part of the selling into the close yesterday felt a little bit artificial to me. We knew that it's the end of the month. We knew that there was pension rebalances that were leading to market selling into the end of the month. We also knew that if the market begins to go down, we're in an environment right now where if the market moves down, CTAs are selling. If the market moves up, CTAs are buying. In a flat tape, CTAs are also buying. So that market dynamic perspective just means that into the down tape that we started to get yesterday afternoon, that just accelerates from systematic flows. But now today is the real day where we want to see what the funds actually decide to do after they've had an evening to digest the information. And I thought that there was a real chance that we could actually get bought up if the market just wants to ignore, you know, okay, we're going to start in May instead of March. Who really cares? Couple month difference as far as the cuts go. But look how strong the economy actually is. So I thought that there was a chance that fund managers might actually ignore the Powell commentary about getting rid of the March cut in exchange for the fact that the economy itself is still so strong, and maybe we could get bought up. So what we talked about, and in just a couple minutes here until Apple. So what we talked about was just, let's pay attention to the opening price action today because that's going to give us some strong clues. And let's also pay attention to some key levels. We wanted to pay attention to the 50% retracement mark of yesterday's candle, which Dimitri was kind enough to provide those numbers very early on in the day. And we also wanted to pay attention to the 2 p.m. starting numbers from yesterday. If we can get back above them, that could really actually create a bullish impulse for this market that could lift us higher, which more or less is eventually what happened. It was a little bit of a grind day today. My biggest concern, honestly, was that the market would just actually be patient today to just get through the earnings tonight and the jobs number tomorrow. But the bulls kind of came back in, brought this market back up, and now we've got Meta and Amazon here ripping us higher, and we're about to see what happens to Apple in 2 minutes. The difficult part about today's trading session was the IWM weakness, because the IWM initially was gapping up the most and then just traded by far the worst today. We were able to attribute that during the day today to KRE, which was continuing to get smoked off of this NYCB as they're continuing to sell off WAL and everything else. And this KRE, these regional banks, are a large component overall of the IWM, and that was helping to create that weakness. We actually had a great trade in the KRE. It was not an easy trade, but it worked out really well. For me, it was my third try. I had to try KRE 3 times. The first trade I took to the long side was a break-even trade. The second trade I took to the long side was actually just a straight-up loser, and that's because I had bad entry execution and couldn't get my risk covered. And then the third trade that came in actually at lows here was finally the one that worked and gave us a decent bounce, and that finally enabled the IWM to recover intraday as well. So at the end of the day here, as I'm out of time, the bulls fully negated yesterday's candle. It's just super bullish. It's just super bullish. Same thing with the Qs, SPYs and Qs. IWM not quite there yet. This still has the potential to change right now in 45 seconds when we get the Apple report, and it still has the potential to change even again tomorrow morning when we get non-farm payrolls. I think that report's at 8:30 a.m. tomorrow. So with that said, just wanted to rip through some of that information as fast as I could. We got Apple coming out in 30 seconds. Get ready. Get ready. 46.49. Up, down, I can't even look at the numbers right now because I'm got this T-triple-Q position going on. iPhone rev I'm seeing as a beat. Apple first quarter revenue is a beat. Greater China revenue is a big miss. It's one that the market's really looking for, is that Greater China revenue. iPhone revenue is a beat. Revenue overall is a beat. Services revenue is a small miss. That's become an important one. EPS $2.18 versus $2.11 is a beat. iPad revenue, small miss. Products revenue is a small beat. Again, iPhone revenue is a beat. Mac revenue is a small miss. Wearables is a small miss. Greater China rev is a big miss. 20.82 billion versus 23.5 billion. Overall revenue beat. So it's a pretty mixed looking report here. I assume that we'll get guidance on the call. Let's try to take a look at the Apple price action. Quick uptick, followed by a downtick. Let's watch the tape here, see what's going on in the tape. So we're trading down in Apple right now on a mixed report, but we're down pretty mildly. Apple down about $1 from where it closed right now. So it's not making any dent into this QQQ up move. at all, given what Meta's still making highs, 451. Wow. Wow. Amazon a little more muted but strong, pulling back here a little bit. Yeah. Yeah, Rock. It's so crazy. I remember buying Meta in the 80s recently. That one I struggled to hold. I had some better holds and some other things, but still, like I feel like I bought Meta is better. I feel like I bought Meta like below 80 after hours or something like that one day, like below the absolute low, and I think I was out by like 102. Thought I was a genius. I mean, it's still a big move, 80 bucks, 200 bucks, and yeah, now we're at 450, working towards $500. Like it's nothing. I'm 60 bucks right now after hours. Sick. Yeah, I bet. I mean, we were talking about how I mean, Meta was trading obscenely fundamentally cheap at that point down there, and we all knew it. We all knew it. It just they crushed it on the expenses towards the metaverse, and then Zuckerberg listened to the market and really focused on. It was when he did that earnings report that he said like this is the year of. I don't remember exactly what he said. This is the year of savings or something like that, or the year of efficiency. I think that's what he said, and the market just like loved it. You know, we're gonna stop just wasting money or cut back on our money wasting. FX was a headwind for China sales, says Tim Cook. Trying to blame that China sales number that everyone's looking at on currency concerns, huh? I bet that there's some truth to it, but that's a pretty big miss. It's weird that we're getting comments from him. Excuse me. It's weird that we're getting comments from him. I thought that the earnings call is usually at 5 o'clock. Why are we seeing Tim Cook comments at 4:35? Reading initial comments. The Meta Weekly chart. Yeah. Look at this V bottom on the Meta Weekly chart. Like, what? Excuse me? They sold this thing all the way down from here, actually. I guess it was just today, or just this week, I guess, that we got back above the old Meta high. I didn't realize that into the report here. So they sold Meta down from like 384 to $88. I think it was $80 after hours that one day, and now we're all the way back at 450, just straight vertical up. You know, a year and a few months later. So impressive. Yeah, here's that Apple full report. Nice beat on EPS, nice beat on revenue. Small beat on iPhone revenue. We are pleased to announce that our installed base of active devices has now surpassed 2.2 billion, reaching an all-time high across all products and geography segments. And as customers begin to experience the incredible Apple Vision Pro tomorrow, we are committed as ever to the pursuit of groundbreaking innovation in line with our values and on behalf of our customers. Ooh, it sounds nice. It sounds nice when you think about Tim Cook's voice saying it. Anybody here jumping on getting a Vision Pro? I'm not. I'm never an early tech adopter. Bill is? Haha, nice. Bill, you gotta let us know how it is. Yeah, I'm curious. I definitely want to try it. I definitely want to try it, but I'm never an early adopter when it comes to tech. And I'm always so slow to like update my phone to a later version too. Never been a tech guy. Is there VTF support in the Apple Vision Pro? Was that the question? I didn't understand what you were asking there for a quick second. I love it. Yeah, insane amounts of cash, Gabriel on YouTube. Amazon CFO, the decline in China sales in part on a stronger dollar. Okay, so it's coming from Amazon also. Improved delivery speeds have led to an increased purchase frequency by customers across major regions. I didn't realize that Amazon was involved with China really at all. Yeah, that's kind of what I was thinking, Bill. I mean, I think that like version 4 or 5 is probably where it's going to be really, really like sleek and cool. Or maybe you're going to want to just be wearing that as you walk around town. I don't know. Yeah, exactly. That's what I'm thinking. Apple maybe bounced a little bit. Here. Careful. Vision Pro is going to be like the Newton to the iPad. I have no idea what the Newton is. No idea. Qs are making highs. Apple Newton. Oh, wow. 1997 model. Gotcha. Cool. All right. Well, I don't know. The Apple Day for an afternoon meeting is always a little bit weird because we don't really do much of an afternoon meeting. We kind of just end up bullshitting a bit, which is fine. But if anybody has any specific questions about anything from today's price action to the Fed to trades, I'm happy to answer them now that things are slowing down here a little bit. Otherwise, we'll probably just wrap things up a little earlier today. And we'll continue to monitor his price action. And I mean, the gap up tomorrow is going to be insane. Qs are up $4 more here after hours off of what was already a big move. IWM's up 10 cents. SPYs are up pretty big too. $2.50 or so. Amazon 170. Wow. New heights. Oh my gosh, and we got the jobs number tomorrow too. Oh, that's right, Bill. I forgot about that. Don't they usually... I feel like Apple hasn't given guidance since COVID. And I actually hate that. They're like the only company still. Like Apple and Snap. I feel like the only two companies that still think that they're too cool to be able to give guidance. since COVID. There's no reason for them to not do it now. Someone in YouTube asking if I have a Discord server. No, we operate through this system called the virtual trading floor here at T3. That's primarily for the professional traders at T3. So that's what we're using. If you're interested in learning more, you can email me. My email is my first initial and my last name, doldensmith@t3trading.com. doldensmith@t3trading.com. From Kevin G. After such a huge downturn, how do you formulate an uptrend thesis? Was it backtesting and experience? I'd like to know when you are referring to for the huge downturn. I don't know if you are referring to, like, you're talking about the year of 2022 and the bear market that we experienced, or are you talking about this market correction that we had from the July high to the October low? I should be able to answer the question kind of regardless. So, after yesterday's Fed news coming into today. So you're asking about smaller time frame. So the question is basically, after such a huge downturn, how did I formulate an uptrend thesis for today? Was it backtesting and experience? So it's always about if-then statements, right? So I thought that the market could do what it did today. I mean, not including the after-hours action. The after-hours action that we're seeing right now, I had no idea that could happen. But I thought that it was possible that we could reverse higher today. And what made me think that, it was really more just kind of research and data than anything else. And that's why research and data are so important. I'm a big believer in technical analysis. Technical analysis studies supply and demand. It tells you how the market participants are positioned and what they're most likely going to do next. But I think that you need to look at it through a lens of fundamentals, of understanding positioning and flow, of just kind of doing a lot of research. So coming into today, it was an if-then statement because we could have gone in either direction, and that's what I was trying to recognize in the morning meeting today. Yesterday was a negative Maribozu candlestick. Today is a big gap up. Technically, we could easily sell that gap up and fill the gap and get below yesterday's low and give downside continuation off of a weak close from yesterday. That could definitely happen. And if anything, that was probably the more likely thing technically if you just want to 100% view technicals. And the negative Maribozu from yesterday was caused by a fundamental piece of information, which is that the Fed is not going to... most likely not going to cut rates in March. So what made me think that it's possible that we could go the other way, I read a piece of research somewhere this morning, it was probably in Pat's note, that made a comment about the possibility of fund managers kind of just, maybe that they just shrug it off and say, you know what, this economy is so strong that we don't care. May cut, March cut, whatever. Look how strong the economy is and that we could get bought back up. So I had that thought process in my head, coupled with the fact that, and I guess this is experience to some degree, we know through experience that the day after a Fed day is oftentimes a trend day, and that trend can be in either direction. It does not have to be in the direction of the initial move that came after the Fed meeting. And there's plenty of examples. I wish I knew exactly when that was in 2022. That was actually the opposite, when the opposite occurred. We traded up, I want to say it was the July meeting, but I can't find it in the chart. I can't figure it out. There was a day in 2022 where there was a Fed meeting that the market really liked from 2 to 4 p.m. And we ripped higher and closed on highs and things were looking really good. And I remember it so vividly because I got absolutely smoked the next day. Day one post-Fed meeting, I totally caught the long trade for those 2 hours as we ripped higher and had really good P&L and I kept a lot of overnight long exposure because we closed on highs. And then the next day, we fully retraced. Like today, it took the entire trading session for us to basically fully retrace yesterday's down move. That day in 2022, I think it was the summer, we fully retraced the up move post Fed meeting in those 2 hours in like 25 minutes the next day. It was just this like brutal downtrend of selling, and the market totally flipped its switch. And for me, because I'm wondering that too, Bill. For me, because I went out so long the day before, because we closed so well, I got like demolished that next day. So that was just an example of what I already know, which is the day after a Fed day is often a trend day, but it doesn't have to be a trend in the direction of the initial move. So and I also thought that part of the selling yesterday was mechanical in nature and actually not from the Fed. We knew that CTAs were sellers into a down tape, and we knew that there was a pension rebalance that was creating selling into the end of the month. So I thought that without that out of the way, there was even a better chance that we could move higher today. But the key to it was going to be to see the opening price action today. I wanted to see what happens in this first half hour. And going sideways for the first half hour is exactly what I wanted from the bull perspective. And then I loved this candle at 10 a.m. We had PMI, I think, hit at 10 a.m. and it created this quick shakeout of lows for the SPYs and the Qs, but it snapped immediately right back. So at that point, I thought that it was kind of on, to be honest. The IWM was getting wrecked, but it was because of the KRE. It had nothing to do with the Fed. 1 second here, I just got filled on something. Yeah, it had nothing to do with the Fed. It was entirely because of the KRE. So I was trying to ignore that as much as I could. Obviously, it was impacting some of the positions that I was in, and keep an eye on the SPYs and Qs. Breaking lows again, though, was definitely not a good thing here at 11 o'clock. But midday kind of range-bound action, we certainly weren't like accelerating to the downside, and we broke right back up again and went into this uptrend. So that's kind of where the thought process entirely came from, that I felt it was possible for us to go higher, but I was by no means married to the idea, and that's important also. You got to be flexible as a trader. You got to have, I'm a big believer in just if-then statements for the market. If this happens, then this is more likely to happen. And you can think about that technically and fundamentally. So... I wouldn't have been surprised at all if we sold off and broke yesterday's low. But what I was expecting to see, if we were going to get real downside continuation and downtrend today, was that the gap up this morning should have been sold immediately. People who really want to sell this market, if we were going to continue down, people who are big funds and they're going to be selling all day, they should have saw the gap up this morning and said, great, gap up, where do I sign up to be able to dump stock? And and they didn't do that. They held us in. So the sellers were immediately showing us that they weren't there, and then we were able to kind of move higher. So that's really where the thought process came from. But really what I want to emphasize more than anything else, I don't want anybody to think I'm a genius because I thought that the market was going to get downside continuation today. I thought that there was a possibility that it could. That's not really what I'm thinking about and looking for. It's about, if this happens, then this is more likely to happen. It was May. Thanks PMD Trading. I remember it being that summer in 2022. So May makes sense. May 4th. Let's take a look at the price action. May 4th. May 4th. Yeah, this is it for sure. If May 4th was a Fed day, then this is it. we ripped higher here. We closed right at this resistance. We closed at highs. It's a positive Maribozu. The market looked fantastic. The next day we gapped down, and if I could see the intraday price action, I literally remember the chart in my brain, the 5-minute chart, what it looked like at 10:15 in the morning. I think that we were below 417 within a half hour. Like they gapped us down and then just destroyed the whole market, and I got my face ripped off. and then we continued down and down and down for days after that until we put in this little low on May 12th. It was right around here actually that I think is like the low for the average stock was actually more in May than it was in October 2022 when the actual market itself bottomed. Appreciate the question, Kevin. From Robert. What would you put more value on Tuesday before Fed the strong JOLTS number and the market did not like it? Yesterday's Fed Powell said he wanted to see a strong labor market, and today a strong bull run. Do you value more what the market does on Tuesday with the JOLTS number, and clearly the market did not like strong labor markets, or Powell's words? Trying to get through to the root of your question here. So basically you're asking me what I put more value on, the JOLTS number or what the Fed actually did yesterday. I have to say what the Fed actually did yesterday. You know, the JOLTS number is only important because it affects the thought process of the Fed. And, you know, the market cycle that we're in right now, we just are like looking through every one of these numbers that's employment related with such a fine-tooth comb, where, you know, small misses and small beats are potentially creating really big reactions, because what is the Fed going to do? What is the Fed going to do? What is the Fed going to do? So yeah, you had the JOLTS number show that there are more job openings than the market expected, so that's bearish. We sold down. And then, you know, the Fed announcement yesterday, I don't know. I don't think that the JOLTS number actually really mattered, to be totally honest. I think that the Fed has already stated very clearly what they are intending on doing, and yesterday was just a restatement of what anyone who's been listening to the Fed from the beginning should expect. From the Fed from the beginning has said 75 basis points of cuts. Basically, you know, the dot plot is showing that should start probably in May for the first one. The market gets all crazy, prices in 150 basis points of cuts, and has to reduce that over time every time we see a JOLTS number coming in, you know, with more openings than expected. And it's just crazy. And then what does Powell do? He does exactly what he's been saying from the beginning. Don't expect a cut in March. 75 basis points is what we're expecting to do. That'll probably start in May, unless something major actually happens here. You know, economy's super strong. They don't seem to be in a rush. So I put more value on what the Fed actually says, but then we have to assess not just what the Fed says, but what the market's potential reaction to it was. And for that, you know, just circle back to Kevin's question. From Mike and YouTube, I started scaling into some shorts in the SPY at about 1250. Okay, I think Josh was trying to short there too. How do you go about the thought process for how to split taking profits around the 80 EMA versus keeping more for the 21 EMA? Is it mostly based on the quality of the setup? Yeah, so, you know, it depends if you're counter trend or with trend and on the different time frames. So if you're shorting there, you could say that you're going counter trend on the 5-minute chart because it's moving higher. Counter trend on the daily chart, but you can make an argument also that, you know, the market's getting into an important potential resistance area from yesterday that's maybe on your side a little bit, and maybe that makes you want to be a little bit more greedy. But if we're just talking about a pure counter trend trade, I want to get the risk covered, then I probably want to cover another, for me, generally 50% of my core position at the 80 EMA, another 25% of my core position at the 21 EMA, and then maintain 25% of my core position in case the retracement becomes a reversal. that's like my general thought process for how to approach that type of trade. But then my thought process obviously changes based on based on all the other factors that are out there, where I might choose to be more greedy or less greedy. So hope that helps, Mike. Appreciate the question. Popping back over to YouTube from Eli. Totally off-topic question. Would you mind talking about what your days were like during your first 5 years of trading? Just talking about how you went about planning versus what you do now, and maybe how you adapted to big catalyst weeks like this versus what you did previously. Sure. Happy to talk about that. So the first thing that you should be aware of is, first of all, markets are always constantly changing, but the market environment that I feel I started in, which was in 2010 with T3, was just a very different trading environment than the environment is now. The strategies that I was using in 2010, 2011, 2012, simply, they just don't exist in the market anymore. I don't teach them to anyone because it'd be a fruitless exercise, because those trades don't exist. But I don't think I kept a single position overnight the first 3 years of my prop career with T3. It was 100% pure day trading. And most of that day trading was counter trend, actually. It was almost all counter trend. I was shorting into up markets. The market environment changed in mid-2012, where what I was doing for the first couple years was really beginning to dry up, and by 2013 it was totally gone. And the long story short is I kind of had to reinvent myself as a trader. Luckily, I never really wanted to be a one-trick pony, and luckily I have always, including to this day, been interested in just learning more about other things. So there are plenty of traders around me in 2010 and 2011 who aren't working anymore in this business, who were using the same strategies as I was in those years and were successful. But when those strategies stopped working, that was the end of their career. For myself, even though I had something that was working for me in 2010, and it was not based on technical analysis, I was like, oh, I want to learn more about technical analysis. I want to know more about different things, so that when the environment did change, I had a knowledge set that I could rely on, that I had been learning and experimenting with, that enabled me to make the adjustment. The other big thing for me at that time, and I went into a pretty big slump in my trading career there in that second half of 2012, was actually speaking to other traders at T3 who are more experienced than me about what they're doing in this environment, particularly Scott Rudler, to give him some props, and Mark Sperling, if anyone knows him, and especially Sperling, to be honest, gave me some thoughts on some trades that I was in and some things that he was doing that had a big impact on my thought process for trading. I adjusted my strategies, my time frame became bigger, I started swinging positions more often, and fast forward to now, I don't think I've gone home flat in like 7 years, which I keep saying someday I'm gonna go home flat, but today is not that day. So that's kind of like the long and the short of it. I can also let you know, because I think that this is also part of the direction that your question is moving in. I worked extremely hard as a new trader, and I still do now as an experienced trader, though my process is much more streamlined now than it was then. For me, in those beginning days, trading and learning about markets and learning about trading was a 12-hour a day endeavor. Monday through Friday, plus an extra few hours on Saturday, plus an extra 5 or 8 hours on Sunday. That's literally what it was like for me when I was first getting started. It was just nonstop absorbing everything I possibly could absorb about markets, books that I could read, podcasts that I could follow. Well, back then it was more like blogs that you would follow than podcasts, though that's evolved. just anything I could possibly get my hands on that I could utilize to learn more. And I'm still doing that now. You know, the market's still evolving, and like all this stuff that we talk about now about positioning and, you know, CTAs and systematic strategies and what are they doing and the market's gamma profile and all that stuff. That's all new to me in the last several years, and I'm still learning about it. So, you know, it's always a constant learning process. There's been a lot more efficiency in regards to just my processes for, like, you know, in the morning as an example. There's still so much information to digest every morning that, I mean, I started I woke up at 2:45 local today and started researching basically. So what is that? 4:45 Eastern. And just because there's so much to digest, especially because I ran out as soon as the market closed yesterday at 4 o'clock. So I didn't have any time to catch up on, you know, the Fed and everything else. So I got a really, really early start this morning. So, but with that said, I don't necessarily do everything that I used to do when I was a new trader. When I was a new trader, I used to write down, like, I have notebooks and notebooks and notebooks full of information. I would write down the economic calendar for the day. I would write down all my trade ideas for the day. I would write down a game plan for every trade idea that I was potentially looking at in my pre-market research. I don't need to do that anymore. My game plans for my trades are very streamlined. I pretty much automatically know how I want to trade things and what the math is behind the trades that I want to take, but that's just from a lot of experience. I couldn't do that in the same way when I was a new trader, so I used to hand write out, well, I'm looking at ExxonMobil today at this entry price and with this potential stop, how many shares would I want to take, how many dollars of risk would that be, what do I want my game plan to look like. I would, like, hand write out all of that stuff in notebooks every single morning, and it was pretty time consuming. You know, another adjustment for me that I don't do so much anymore, but I'm a big advocate of for new traders is, like, journaling. When I was a new trader, I used to, when the market closed, my work was just beginning. I would review every single trade that I took throughout the day, every day. I would review the mechanics behind the trade. How well did I trade it? Was I able to follow my game plan? What did my psychology look like? All that stuff. And I'm still a big advocate of traders doing journals. I think that, you know, for me, journaling actually, even though I really don't do it anymore, is one of several factors that I would attribute any overall career success that I've had. But again, at this point, it's all just so streamlined where I just follow my game plan. I follow my game plan. And every once in a while, I make mistakes. And when I make those mistakes, I know exactly what those mistakes are. I don't need to write them down and journal them anymore to beat myself up, because I'll be beating myself up about them the rest of the evening. So, yeah, I mean, it was just you know, constant work, but the work that I do then versus the work that I do now has adjusted and evolved. You know, another thing, when I was a new trader, I made a rule for myself that I did not allow myself to be in more than 3 positions at a time, because I found that once I was in more than 3 positions, I couldn't manage them properly. I couldn't keep track of my game plans and what I was in, and I would start making a lot of mistakes, and those mistakes were costing me money. Now I can be in 25 positions and be on a phone call with someone, and the person that I'm speaking to would never know that I mean, it happened yesterday. Unfortunately, I'm talking to a really, really big institutional trader that I'm trying to bring into the company, and he'd be massive if I could get him into the company. But it just so happened that I was on the phone with him at 2:35 yesterday for basically a half hour. And if you saw the amount of executions, or if he saw the amount of trading executions that I did over the course of my phone call, it probably would be baffling for most people. But I don't need to think about it, truly. When I'm already in a trade, I don't really need to think about the trade. I do, of course, big picture, but moment to moment, I don't. I know exactly where I'm supposed to be game planning on every trade that I'm supposed to be in, as far as where I'm supposed to be buying, where I'm supposed to be selling at any given moment in time. So if the market is moving and I'm, like, multitasking, I can hit all of my trade executions pretty much perfectly while maintaining a conversation with someone, and honestly even kind of reading the VTF on what's going on. I could not do anything anywhere near that as a new trader. That is purely a function of just doing this for 14 years or whatever it is now. It just took a lot of time to be able to get there. So my processes are just much more streamlined than they used to be. A lot of that just comes with experience and learning, to be totally honest. So I hope that answers your question. If you have any follow-ups to your question or anything that I didn't cover, feel free to ask it, and I'm happy to help. Cool. Yeah, no problem. From Leith, any thoughts on how to play tomorrow given the big gap up? It's something I'll assess in the morning. I do all of my game planning stuff in the mornings every day. In the evenings and the afternoons, if I'm doing anything after the afternoon meeting, it's just kind of general research, reading about earnings reports or reading about the Fed or looking at some data or whatever. And then tomorrow morning, what I'll be doing tomorrow is I'm going to be assessing basically extension on multiple time frames as I try to figure out my game plan. Are we hitting extreme extension in the SPYs or Qs because the gap is so big? My guess is probably not because of the pullback yesterday, but we'll have a lot of opening extension tomorrow morning, most likely on the upside. So, part of the game plan tomorrow will probably be, hey, we've got really, really big gap ups in some of these names. Be careful chasing those gap ups because the gap itself is so big. Instead, let's, see how the market handles the gap over the course of the first 30 minutes as we handle the small time frame extension. So thanks for the question, Leith. All right, gang. Looks like we got through all the questions. What a crazy, 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 crazy week. Seriously. Insane. Why do we have all these economic numbers and earnings reports all in the same days? It's just crazy. Keeps it interesting, that's for sure. Keeps us busy, keeps us on our toes. Tomorrow we still have non-farm payrolls. Have a great night, everybody. I'll see you all tomorrow.